Are you ready?
Ready.
All right, let's go. Kevin here, Top 1 Financial Advisor and best-selling author. We are here to talk about the stock market. Today, we are going to break down two of the most popular trading strategies out there, day trading and swing trading. So we're going to analyze what are the costs, the benefits, the upsides, the downsides, and everything in between. So first, let's go ahead and define what trading is and why it is different than investing. Now, I'll be honest with you, it's a little bit of semantics, but a lot of people, when they think of trading, they think of one thing. When they think of investing, they're thinking of something else. Investors, or when we talk about just investing, we are usually talking about buy and hold. I invest in index funds. I buy them, I do not sell them. I've been holding them for decades now. If I am looking for just individual stocks that you see me invest in public or in my IRA or wherever else, I'm usually holding those and I will reevaluate every 6 months. But 8 times out of 10, I'm holding it for the long term and I will have had it for years. A company that we had talked about a few days ago, Meta, which is now Facebook, which is going back to changing the ticker symbol. That's a conversation for another day. But I had that one for years before I let it go. I was an investor. I stuck with it for a mighty long time. So that is investing. Trading is usually short term, way less than a year in most cases, sometimes a day, which is what day trading is, or sometimes a few weeks or a month, which usually is considered a swing trade. So those are the definitions between the two. Here's what you need to know. Trading is more difficult. It is a little bit more risky depending on how you are doing whatever trading strategy you are looking for. The reason is your window for being right or wrong is condensed. And the more condensed it is, the more pressure it puts on you to be right. An example of what we talked about yesterday when I talked about Tesla. Tesla is up 70% this year so far. So January and half of February, Tesla up 70%. But it was down 65% last year. All of last year was down by 65%. Well, if I were day trading or swing trading last year, then I would have lost 65%. Or, if I held for the entire year, I would have lost 65%. If I just invested it in a day, I could have just invested in a bad day and lost a lot of money. But if I were a longer term investor or even a swing trader in January of this year, then I could have made 70%. So that timing really matters. If you are holding Tesla or any stock for 2, 3, 4, 5 years, the odds are that you are going to make money on it. And that the odds are above 90% that that stock is going to be positive. Now, that's just a general stat. But it's true. Any company that you hold, again, on average, if you hold it for 5 years or more, it's above 90% chance that you're going to make money. The stock market over the long haul is usually up. But the stock market between a day, 2 weeks, a month and a half, it can be up in the air, and it can be up in the air for a bunch of different reasons. So that's what makes trading a little more difficult. Now, why do people do it if it's difficult? That's because they can make some money. And a lot of people, well, really anybody, is trying to make an extra few $1,000s a month or even a few $100s a month. And the allure is, imagine making $5,000 extra a month. You go to work, you come back, you make 5 trades a month, 1 trade a week, or maybe 2 trades a week, and you're making an extra $5,000. That would be amazing. That is what some day traders try to sell you. So let's go ahead and break it down. Here's how it will work. If I am buying any stock for a day, all I really need is to make 1 to 2% profit. That's it. That's all I need. And you can look at almost any stock, depending on the day. If it's earnings, it can go up 20%. It can go up just 1% on just a regular day. And that can be quite profitable. The problem is, for it to be worth it, you probably have to invest a lot of money. For example, if I have $100,000 I'm trading and I invest in Apple on any random day, let's just say Apple, it's a normal day, the market is up, it just goes up 1%. A 1% move up or down for Apple is normal. That's $1,000. Okay, so I made $1,000 profit. Boom, I can take that. All I need to do is do that 4 more times within a month, and that's $5,000 extra to me that I can go and pay off my debt early, or I don't know, go vacation, do whatever it is that I want to do. Now that is in an absolutely perfect scenario, because what if you lose, right? What if you invest in something and it goes down 2%? Now, right, you need more money to come back up and make a profit. And that is where the trading cycle gets dangerous and gets very difficult, because in a perfect scenario, nobody comes into this and says, I want to invest in something and lose money. Nobody does that. Nobody does that. But it does happen, and that is what makes trading more difficult, especially when you're day trading, because sometimes to enhance the buying power, some people will borrow money. It's called a margin loan. So I may have $100,000, But let's say I have 50. I can borrow 50 from TD Ameritrade, Fidelity, whomever, and now I have $100,000. I go invest in something, and hopefully it works out for me. And for those who are lucky enough and good enough, they make a significant profit, or at least a decent profit, to keep their operations going. Now, stats will tell you, studies will tell you, most day traders fail. You can go and just randomly look up on the internet and you'll see anywhere between 90 and 95% of day traders do fail. As someone who was an advisor, sat down, looked at people's accounts and see what worked and what didn't work, I didn't find many successful day traders. Now, I know of one in my personal network, and she has done quite well. I don't know how she do it, but she has done quite well, and that's like the one person I know personally. But most people do not do well with day trading. So if day trading is out the picture, and if day trading is extremely difficult, what if there is a midpoint? What if there's something that's like not as difficult but can make decent money? That's where swing trading comes in, because it gives you the advantage of making money a bit faster without putting so much pressure that you have to be right within a single day. The other thing too is it doesn't necessarily require $100,000 for it to be worth it to you, and that's because you have more time. So going back to the Tesla example, well, a swing trade can be several weeks. A swing trade can be maybe a month, depending on how big of a swing trade you're trying to make. Well, 70%, right, on $10,000 that's sizable. That's sizable, right? That's what, $700? That's decent, right? If I'm only doing $100, then maybe that's not the biggest thing in the world, but going from $100 to $170, that is a lot, right? If you're taking a percentage of it. So that is something that you definitely you don't want to snooze at. But again, the problem is, what if you're investing in something at the wrong time? What if there's earnings? We talked last week. I think it wasn't Snapchat, though Snapchat did not do well. Y'all remember the name of the company we had talked about. In any case, it dropped 35% in a single day, right? What if you just invest at the wrong time and boom, 35% of your trade is gone? It's going to take you a very long time to make up that 35%. You could invest, we talked about Google, that shares of that company, I'm looking at the speaker here, shares of the company, because of the whole AI scandal or mistake, they lost $100 billion in market cap that day. So you invest in something, you put in $1,000, $10,000, boom, 10% gone. Right? So now you have to figure out, what do I buy now to kind of make up that money and become profitable? If you are trying to live off of this, right? And some people claim to do this, more difficult to do than to say on the internet, but to say, look, this is what I do as my day job. I use this and pay my bills, and I just live this way. Very stressful, very difficult, because you have to be right way more often than you are wrong, and you have to do it within a set time frame, because the bill's gonna come due, right? You got light bills, you got all this stuff due, and it's extremely difficult and can be very stressful. So how can you do it in a way that makes more sense? There are a lot of rules that you should put in place and a lot of things you should pay attention to. Thankfully for you, we have several videos on swing trading on the channel that we talked about for years. I'm not going to go through all of the strategies that are out there, but I will tell you this: not every strategy is going to work every single time, okay? Not every strategy is going to work every single time. How much do I swing trade? I talk about this inside our members only. Some of the videos that you saw on the screen were from our members only. I trade about 3 to 5% of my total net worth. That's it. It ain't much. And we have gone through the trades that have gone well. We'll go through trades that don't go well. And it's usually just a few $1,000s for me at a time. I make a little bit of money, I say yay, celebrate, and just roll it over and go and do something else. But for me, it's not a big part of my strategy, just because the odds are not in my favor more often than not. And that is because, again, let's say that you are profitable, right? We're talking, say take $100,000, $10,000, whatever it is, and you make one good trade. You make $1,000, then your next 2 trades you lose 500 apiece. Now you're breaking even, right? It's very difficult to make sure that the numbers are in your favor more often than not. And you also have to consider taxes. When you are trading, and these are short-term trades, anything under a year, you are going to pay the higher price for capital gains, the higher tax rate for capital gains. So that means that you can become a profitable trader, which is already against the odds, and then you're going to already pay a higher tax rate. The only way out of that, well, actually 2 ways. The main way out of that is if you're doing this inside of a Roth IRA or a traditional IRA where you have some sort of tax shelter, which if you were doing that, which is great, if you could do that, be profitable. you couldn't use the money now. So that's not going to help you pay your bills today. So that is one caveat there. The other caveat is that if you have a regular taxable brokerage, if you make under a certain amount, your capital gains can be zero. However, you do want to double check, because tax rates do change, and see if that was either long term or short term. That might actually be long term capital gains. So be careful on that one. In either case, I'll put the capital gains tax rate here. That way we can all just verify it and look at it, so I don't get that wrong. So that'll be on the screen. But in either case, it's difficult. It is, I was gonna say it's difficult and it's hard. It is both of those things. But if you have to do any one of them, if you ask me, I think swing trading is a bit better. I would be very limited in terms of how much money you're going to commit to swing trading and how long it's going to take to learn how to swing trade, because there are dozens, I mean dozens of strategies that you can use that claim to be more successful and more profitable than others. You got to go and try out what works for you. The one tip I will give you, if you're trying to go on the swing trading route, notice I'm talking about swing trading, not day trading. I don't teach or talk about stuff I don't know, okay? I'm not the day trading guy, okay? I'm just not, and there's not enough research to support it, at least in my view. But if you're going to swing trade, my biggest tip is to tell you to practice. There are things called paper trading apps. You can do this at TD Ameritrade. They have something called Thinkorswim. You press a button and it's paper trading, which shows you it's basically a simulation. It's a video game. They'll give you $100,000 and it will simulate how your trade would have went and show you if you were good or bad at doing that, and then that is going to help you get ready to go out and trade in the real world. Now, even though you can practice well in the simulator and it gives you real conditions of what real stocks did on those actual days, the issue is the market always changes. People who claim to be day traders and swing traders in 2020 when the market was crazy, it worked in 2020, 2021, 22, and so far in 23. Those years were different. The environment was different. Anybody could have gotten extremely rich real quick off GameStop, AMC, Dogecoin in 2020. It was easy then. Zoom, like all those companies, Peloton, it was great back then. But the market does change, and every so often the market does change. So some years it's easy to do, other years it's not. That's why investors win more often than not, because you don't have to worry about those cycles. You buy, you hold, you're fine. If you're doing swing trading, it's a little harder, but there are some ways to kind of win out in that space. And then day trading, very, very difficult. I'm talking 1% to 2% in my view of people who actually succeed. So those are the differences between the two. I've given you my thoughts. Would love to hear your thoughts in the comment section below. If you have a question that you want me to cover, you better let me know right now. Okay, hit the like button, hit the subscribe button, and then drop your question. Those are your 3 things that you got to do. And if you want to take your game, your investing game to the next level and learn some of the strategies that we were talking about for swing traders, then you want to make sure that you hit the members only. And our members know I've shown you my actual account with actual trades that I have done that have worked, and those that don't work either. We talk about those, and you can see right what works, what doesn't, what I do, and what other people do, and what strategies have worked. And we do research, right? We have pulled together a few studies to show what universities say work and what does not work. So all advantage for you, side members only. It's up to you. It's just there. All right. Okay. I will talk to you tomorrow. Bye.